What's up, everybody? Welcome to another edition of Dave's Daily Dives, where I take a look at some of the key stock index charts of the day and then give you 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs. So you got you got a little macro view, and then you get some actual actionable items that you can investigate further. Okay, so first thing I want to start off with is the Nikkei, because we ran into this sort of intraday spike that got sold off pretty hard the other day. I don't have it drawn, and I'm going to give credit to Jeremy Mullen for having a longer-term fib target that ended up getting hit up here when this selling started. But what I've done is I've drawn a tighter fib, and I suppose you could say it starts from here, but regardless, a little tighter fib here, just to give you an idea of where this possible selling could stop here. These are dollar-denominated Nikkei futures, so I'm thinking the 38.2% retracement, that brings it down to 21,801. So I think what's happening is you've had 3 consecutive days of, and I guess today would be the 4th of some selling pressure here on the Nikkei, and as a result, it's put pressure on the U.S. at the open. Okay, so when U.S. markets are opening in the morning, you tend to see a little bit of a dip, and then we're digging out of this hole every day because of this risk off that strikes Asia and then ends up getting into our session. Speaking of our session, we're going to look at the S&P 500 here. So same sort of situation where I've got a fib from the August lows to the recent highs, and we can see where the next area of potential support is. Now, even though these candles are green here because we've opened lower, we're still not, and we've opened lower and closed higher pretty much all these days. But there's a lot of dangle, a lot of these wicks dipping down here, then that are met with buying intraday. So that's a good thing. Still the 23.6% retracement of this move here sits at 25.54 in the S&P, just about 24 handles off of the current price action. So that could happen intraday, a quick little dip, no problem. But we've actually put in a little bit of a floor here with the once, twice, 3 times a lady coming down on the dip and being bought, and that's right around the, let me get the exact number here for you. Let's pull this up. So today you're talking 25.66 was the low today. A few days ago, 25.66. Anybody want to venture a guess here? That's right, folks, 25.66. So they've come in and bought 25.66 on multiple occasions now. 3 times in November they've bought 25.66. So have to wait and see if it continues should the market still come under pressure. Other thing I want to look at here, the NASDAQ composite, the tech-heavy NASDAQ, but had some good news, last week out of the major tech players, but still this is getting trapped in the same sort of scenario where we've peeled back, come down a little bit, but the range is beginning to tighten. I think that's sort of a theme that even today's price action could not break itself out of last Friday's range, really, last Thursday's range when we started to see that move. So pretty tight, but still overall very bullish structure here for the NASDAQ. Now, one thing I did want to look at before we get into the individual stocks here is this euro versus the US dollar. Now, obviously, the huge trend in favor of the euro to kick off the year into September, right around 121 when it started to stall out. Found some support at the fib, rallied up to the 50-day, stalled out again. Now here we are on that 23.6. Now, logic would tell you that this being a support level now should be a resistance level, and it has been sort of this 117 area, and the euro dollar pair is starting to just kind of tick below there. I'm looking for one of 2 things. We have a commodity channel index that was oversold, has now crossed over the 0 line. That's actually a buy signal on the daily. Should that buy signal fail, then I'm definitely expecting follow through to the downside and targeting the 114.25. Why is any of this important? Well, I think the global play was money was flowing out of euros into US dollars and into the US stock market. That's slowed down a bit here as we're getting some debate back and forth on tax reform with the Senate, releasing their plan. So we've got the GOP plan, the Senate plan, well, the House plan, the Senate plan, going back and forth. So more of the same in U.S. politics, playing ping pong back and forth and getting nowhere. So the market is obviously pretty geared up here for tax reform, but as long as the U.S. economy keeps on humming along, we won't be so dependent on that for the rally. Okay, first, Arista Networks, ticker ANET. I've covered this stock before, and it just keeps going. You have a little bit of a dip below the 50-day into July, or into the end of July into August. Got another nice little intraday dip into November. Should have been met with buying, and now this thing is just off to the races. So one of those where I think you might have missed the boat a little bit here with it up at 227. Because if you're looking for a stop, you'd have to go underneath that 50-day all the way at 190. That's a ways away. So I think you want to let this rocket tail kind of cool off a little bit. Don't go jumping head first into it, even though things look great. And it is running. If you get a pullback, I think I would just feel better about the risk versus reward in a scenario like that. Then I've got Cognex, ticker CGNX. Here, another just wonderful bottom left to top right. And remember, these are actually ranked #1 strong buy stocks. So what that means is that earnings estimate revisions have come to the upside, supporting some of this price move. Last time they were below the 50-day was here in the summer. Since then, they have continued to trend higher. Another situation where this 50 days all the way down at 118. So maybe a little too much. Maybe the more adventurous types would like to chase this a little bit. What I would do is use this swing low, just below 135, above 130. I would wait for it to retest that level at least, rather than chasing this scorching hot comet tail to the upside, but still a victory. Then we've got Warrior Met Coal, ticker HCC. I was very surprised to see coal stocks pop up on my list. Look at this fierce move bouncing off of the June lows up to new highs. A bit of a retrace. We can draw our fibs here, of course. See exactly what sort of retracement we were talking about. And you can see there it's about a 38.2% retracement on that move. Let's spell it out here. Boom. And now we're going to the upside. So I would expect to see the stock at least hit an extension level. So here's an easy little cheat, right? If you don't want to have to draw the extension, you just look at this 23.6 from here to here, or this 38.2 from here to here. Whatever this difference was here, reflect that over this zero line, and you've got yourself a nice little target. So I'm going to do that here. So let's say 27.54. Go ahead and subtract the 38.2% retracement of 22.79. And there you have 475. Add that to the 27.54. And this is going to be your 38.2% extension up at 32.29. Nice little price target here. Also, the way you can structure this is you can go long here, put your stops either just shy of the 50-day at the 23.6, or you can even come a little bit further than that. Okay, so that's Warrior Met Coal HCC. Then we've got Kelly Services. I had this a while back in Momentum Trader, I believe. They're a staffing company, and we could see lots of chop coming in here, and then all of a sudden we broke out from this resistance level in the 24.50 range. That's provided plenty of support. You have a little bit of a consolidation and then a move here, okay? I think this stock is moving. This consolidation period provided plenty of time for people to argue back and forth, and ultimately the bulls are the ones who won. So you can go long here. You can put your stops if you want to be conservative south of this sort of 25 level. I think really the top end of this range is going to provide plenty of support. Obviously, you've got this gap up, so you can get down just underneath that gap, and that'll be fine too. That's Kelly Services, Kelya. And the last one I'm talking about is ZAG Incorporated with the appropriate ZAG ticker. And now this is another one here where you've got Stock came down to the 50-day moving average once, twice, and then is broken out to the upside. Really nice move considering that it took so much time on that 50-day before starting to rally up. So you had to be very slick to catch that. Not a lot of people were fortunate enough to do so. But I think you're getting another nice little development here this low. So you can put your stops underneath 18. I think you can chase this one a little bit. Again, that ZAG ticker, well, you guessed it, ZAG. That's all I got here for you today on Dave's Daily Dives. As always, you can follow me on Twitter at Bartosiastics. Of course, I'm the editor of Momentum Trader as well as Surprise Trader. And for the next few weeks, covering for John Blank's Large Cap Trader. And then I've got my videos that I'm sure a lot of you have seen on our Zach's Live Trader site, as well as trending stocks on the Big Zach's page. So I'm around. Thank you so much for hanging out with me here on Dave's Daily Dive, and I will see you all later in the week. Have a good one.